Well, good afternoon, everybody. I'm delighted to be here. My name is Barry Johnson. I'm Director of the Division of Translational Impacts at the National Science Foundation. One of our programs is the Small Business Innovation Research and Small Business Technology Transfer Program, where we fund about 300 startups every year. And I'm happy to go into more detail on that, but for now, just introducing myself. So delighted to be here.
Cool, I'm Bryan Colligan from Alpha Growth. We deploy capital on behalf of blockchains. We have 12 different blockchains we deploy capital from. They have ecosystem criteria, and we try to match them to the projects that they want to see for their chain. Over the last year, a little bit less than this guy over here, it was about $7 million in capital deployed across 120 different projects.
Hi, my name is Silona Bonewald, and I am founding a new nonprofit called the Foundation for Open Source Ecosystem Technology. And for that, it's talking about how do we create the correct ecosystems so that we can actually address all of these different funding needs. And in fact, I work with things like the Digital Public Goods Alliance and the UN and a bunch of other foundations talking about how do we go in and qualify these things that we do want to fund. And what does that look like? So we've been working on some standards in regards to that.
That is wonderful. Okay, so I'm going to start this off with, the biggest thing. When you're talking about grants, and it really sounds like kind of a nonprofit play. I've had a nonprofit for a while, and grant writing is exceptionally difficult. How does blockchain make it easier? Like, what are the criteria that you would lend to, like types of projects? Like, I could literally go whip up using Midjourney a really cool PFP project and fund food for my cat. Does that count? Yeah. Oh, he's saying yes. Okay. So anything, right? Anything you can imagine. Go ahead.
Well, I'm happy to start. I'm not sure I have an answer to your question of how blockchain helps the activities that we do, but I think, I think I can address how what we do helps blockchain. Because we try to make our process incredibly simple for someone to apply. So we start our process with a pitch, 3 pages, okay? And that's what you go online, you submit, we review that and we give you feedback, and we either invite you to submit a full proposal or not. But we're trying to identify things up front that have a technical innovation, that are clearly aligned with our program, and have a tremendous market opportunity. So we really are looking for technical risk, high reward opportunities, and trying to make it easy for you to get into our program. And again, as I mentioned, it is equity free. We do grants. These are not investments in a startup company the way you might normally think about it, but you can get up to $2 million over a 3-year period to get the company started. And that's what we are focused on, is startup companies. If you have been around the federal government at all and understand or know of the SBIRS TTR program, you might not know that NSF created that program in the 1970s. And you may also not know that we invest or fund startups. We're not like a Department of Defense or NASA, where we're developing a solution that we want to acquire. We're trying to identify unique, innovative companies that have great ideas and great potential and get them off the ground before the private sector would be willing to put money into them. That's where they have technical risk and they have the need to mitigate that risk, and that's what we're trying to fund them to do.
I wish I'd known about you a decade ago. I was doing consent in dating. It was a little too early.
That's a great question. Ironically, our process is very similar to Barry's over here. We have a form of application. We work with like 10 or 12 different chains. We basically run their whole entire program. And I think the key to know is they already have pre-existing criteria. They already kind of know exactly what they want to see. And what they're looking to do, the anecdote I say is, imagine you have an iPhone and there's no apps on it. What's your iPhone worth? It's not worth a lot. Right, so these blockchains launch, they launch 4 or 5 apps from their friends build on their chain. Maybe they got like $100 million, maybe they got $1 billion in token around. And what they need to do is they need to launch apps on their chain so that people will come and use the chain, right? So it's kind of like more of like a private equity play. Usually a chain has a thesis A thesis could be, hey, we're a DeFi chain, we're a SocialFi chain, we're an NFT chain. It doesn't really matter. But they all have like an individual thesis on what they believe is going to be successful in blockchain. And then they have KPIs, right? So at the end of the day, they all want to create fees and make a sustainable chain. But right above the fees, you have is your project going to create transactions? Is it going to create TVL? Is it going to create trading volume? Is it going to create new asset creation on the chain? Are you going to bring a bunch of users, right? So you need to be able to have a project to come to the chain and say, hey, if you do have a Mid-Journey cat project, it's a little bit of a stretch, but if it's a famous cat and there's a million people following that and they want to buy that NFT, there are chains that are like, hey, we'll give you $100,000, we'll give you $1 per user to come and if they could buy an NFT on the chain, right? So that's the way you have to think. Every chain is different. They all have different criterias. We're tracking about 270 chains. We work with 10 of them, and I don't know.
Do you have a quickie little handbook? And if you don't, can I make one for you?
What kind of handbook?
A little handbook on all the chains and all their criteria. And
We're working on that, right? So somewhat recorded, I think 50 or 60, like on our website, on exactly what they want. And then when you come through Alpha Growth site and you go for a grant, based upon your categorization, we have a pitch thing, and what are you going to bring to the chain is kind of one of the questions. Then we could start to match you. That's basically what we do.
nice. Now you're talking about open source, and this is kind of like open source used to feel, at least to me, coming from the private sector and from the startup communities, like, well, why would I do open source? That's like building something for free that everybody can use, and where do I profit? But that's actually not how it works. I mean, if you look at WordPress, WordPress is making plenty of money, and that's open source. And Agora World is building the basically WordPress for virtual worlds. It's plug and play, no code. That's going to be open source. Imagine all of the transactions that'll go on that. So talk to me about why open source and why it's so important to the entire ecosystem.
Well, with open source, it's actually much bigger than you realize. There's a lot of different surveys that have been done that are out there. The UN did one, Open UK did a really good one on all the different ways that it is integrated and impacting and how that affects the different countries. And so there's a bunch of, if you hit me up on LinkedIn, I'll give you some links to go sit there and see how they're done. And they were, at least last I checked, Open UK was opening up their entire process for how they did it for the UK so that other countries can go in and do so. But they found that, basically the majority of businesses are using open source, even if they realize it or don't. And Log4j was a good, ta-da! You were using it, you weren't using it very responsibly, now you need to go give back. And so I spend a lot of time in that space in regards to it. And one of the things that I find that I've been talking with a lot on the blockchain element of that is how do you truly evaluate a blockchain or an AI if it isn't open? If you don't have, and I'm not talking data privacy, data can be locked down. We don't have to give up privacy with it, but we do need to know what these things are and how they work. And I think that's going to become more and more important as standardization and regulations impact more.
Well, what's interesting is Third Web is open source, and they have plug-and-play contracts. I literally just built a marketplace in like an hour and a half, and all of those contracts are audited. And when it comes to building the ecosystem of the blockchain, making it easier for people to onboard, I think, is the central key. And if you have open source and you're not looking at, okay, I have an idea and it's going to cost me $180,000. I don't have that. I guess I'm not doing the idea. When you have open source tools, you actually have the ability to at least whip together an MVP and see if your idea is even worth anything.
And by the way, I feel like I should reveal that I used to be VP at Hyperledger, so I do have an inherent bias.
So what are the challenges? I mean, I'm just going to throw this out there, okay? So I travel all over the world working with startups, figuring out how they're going to get funded, and how does legislation play an impact in this? Because you're going to give grants to people, but what if what they want to do is actually something that the government in whatever domicile they're in says, oh, good, no, we don't want to do that. Do you look at those types of things? Do you find that that's at all a stumbling block in the industry?
Well, we do. The National Science Foundation serves all of the science and engineering disciplines. So the division that I'm responsible for serves all of those activities. So we fund programs or startups in all of the science and engineering disciplines. So blockchains just happens to be one of them, but we fund activities in cybersecurity. We fund activities space technology, energy technology, manufacturing technology. I mean, you name it. We have a long list of topics that we support activities in. So we're open to any ideas. The things that are key for us, one, our focus is on startups. So we're not really interested in you coming forward with a company that's been around for 10 years and you just need money to expand or something of that sort. That's not our focus. We're focused on startups. In fact, 80% of the companies that we fund are getting money from us and getting money for the first time. So we want to be that first money in prior to when the private sector might have any interest in it. So that's one thing that's really key. Second thing that's really key is there has to be a technical innovation. We're looking for the high risk, high reward things. And so, we want to put money in before it's a proven technology so that you can prove it, mitigate that risk, and hopefully develop it further along. So that's the second thing. The third thing is that we do try, once you get down the road in our program, we try to incentivize private investment. We have a program where if you can go raise $1 million for your company, you can apply for up to $500,000 from us. Again, equity free. So you get $1.5 million in your company for equity of only $1 million going out. And so our goal is to get the company to the point that the private sector can take it over. That's our goal. And we've got a long history. And again, we like to brag on some of the things we funded. I mean, we funded Qualcomm when they were a startup company.
Wow.
Okay? Us and DOD were, through the SBIR programs, were the first money into Qualcomm. So we funded them. We funded Symantec when they were a startup company. More recently, we funded Ginkgo Bioworks, which is a synthetic biology company that's now a publicly traded company that came out of fundamental research that had been funded. So those are the types of things that we're looking for. Innovations, first money in, technical risk, huge potential to have an impact.
Awesome. And how long does that process generally take?
Well, it's it's a great
I mean,
question.
seriously, because we're talking government. How many of you think it's going to be 6 months to 12 months? Right? You know for a fact. Okay. So how long does this process take? Because let me tell you, I can have an idea today, and I can have an MVP up in a week. And if the grant takes a year, someone will have come up with it, funded it, and launched it, and I will not get first to market.
Yeah, and if you can have an MVP in a week, you're not a match for our program. What we're interested in is funding
Really?
technical risk. Absolutely. We're not going to fund you to do product development. We're not going to fund you. We get a lot of companies that come to us, and all they need is an engineer or software developer to write code or design some hardware. That's not our niche. We want to fund things that are very, very early stage technically, so that they need to do some additional applied research in order to prove that they can even do it. We fund a lot of companies that don't know that they can do what they believe they can do from a technical perspective. And so that's the niche that we are serving. It's not product development. So, yes, we take a while, okay? It takes, the pitch that I mentioned, you'll get an answer on that pitch in less than 3 weeks, okay? So it's a 2 to 3 week process to review that pitch. Once you are invited to submit a proposal, that's anywhere from a 4 to 6 month process, because we do have technical experts and commercialization experts review that proposal. And then once we decide to fund it, it's about a 30-day process to get you to the point that you have money. So it's not quick. Well, we would love to move faster.
But it's not a year.
Yeah, it's not a year.
It's not a year.
It's not a year. And again, it's early stage. I mean, I did a startup, and the people that invested in my company, early stage to them was I had an MVP, I had a paying customer, I just needed to be able to grow the company and scale. That was early stage to most of the investors. That's not what we do. We're way earlier than that in this process.
Got it. And how about you? How long?
So about 1.5 years ago, it was down to 48 hours. Yeah, but not right now.
Oh.
Bear market.
You're killing me.
Yeah.
I was like 48 hours. I was getting really excited. Were you guys getting excited? Let's get excited.
I think that'll come back again in the next cycle again. But we were acquiring projects, like we're trying to acquire 5 projects a week. Like that was like our target. But And it was like 50K, 48 hours, go, go, go. Like acquire as much like traction as possible. Right now, I would say generally it's probably like a 2-3 month process. And we did one in 2 weeks as well. That's usually on like the 50K side. Anything over 100K is generally weeks to months or more, right? We've deployed as much as, I think well, it wasn't a grant. It was a grant with an investment, about $2.5 million was the most we deployed in a project this year. Yeah.
I like that number. I know, I'm like, right? 2.5 million, do you know what I could do with that?
But so you have to understand that this was a proven team.
Yeah.
They had launched a protocol before on another chain that acquired about 70 million in TVL. They had a process, they had PR in place, they have distribution in place, not just the technical. The tech was already, it's open source code, so it's copy pasta. You can launch it in a weekend, to be honest, right? So they have a press machine, they have liquidity backers, they know how to grow the protocol. They had all the distribution mechanisms, the influencers, the KOLs, and they brought it in a package. It was like, this is what we're gonna do. This is exactly where we're gonna use the money. It's gonna take us a weekend to copy pasta the code over and deploy it, but here's what you're really gonna get. You're gonna get growth of your chain. You're gonna get this much TVL. You're gonna get this many users. You're gonna get, so it was really like a business pitch, and it was very, very solid. That process did take about 4 or 5 months to go through, qualify, due diligence, all of that, but yeah, it was cool.
That sounds amazing.
Yeah.
Now, open source copy pasta. One of the things that I do when I work with family offices, they want to invest in blockchain and they don't know what they're looking at, and they'll go through these pitches, and I'm thinking, well, this is 4 pieces of open source software skinned with a pretty front end. There's absolutely nothing to protect, so why do you want to give them $5 million? And here you just got them $2.5 million in a grant for something that's copy pasta. So how does that look in this whole ecosystem? I know a lot of people are afraid to use open source because of that same intellectual property piece. Like they don't have anything to protect. Or is that just their starting point, and everything they build on top of that, then they can protect that? And it's not just a trademark and a logo.
There's a lot of different ways that people go about doing different business models on open source. And open source itself is not a business model. But there's a lot of different ways. One of the things that we find that happens out a lot is that copy pasta. So it's really about how do you get your brand out there, how do you have the team, how do you have all of those different pieces out there, and that's pretty important. Also, people always want to know who they get to shoot when something goes wrong.
Yep.
So, and that's, they're not gonna let me say it, but that was basically the Red Hat model, right? Is they're using stuff that other people have done and have created and things of that nature, but you knew that if you were like a government agency and you wanted to make sure it was gonna be up and you wouldn't get in trouble, you were hiring these experts who would, take the hit in regards to that. And so that was like, another big model. And then there's like groups like Hugging Face, right? Where they're like, well, we're an open source platform on a not open source platform, which is GitHub, but okay, whatever. And that's how they're gathering a lot of different things together. There's a lot of different pieces in regards to it. I think a lot of it is really figuring out what does make you special. In regards to that, is it the fact that you have the people who are the popcorn makers, who always come up with the cool ideas, who always do all that kind of stuff? Then that's it. Are you the one that does the land grab and has all the users and can bring the users over? Then that's it. I think that there's a lot of different stuff in there. I've worked with some companies where, PayPal, where they open source a bunch of different things, but they're never going to be an open source company. No. That's why I was the director of inner sourcing. So we used open source tools and technologies internally to allow that kind of innovation to occur without being open source. And when they did open source, they never, gave away their special sauce, right? They don't open source the fraud detection software. They open source these other tools for, mechanics for messaging and communication and things of that nature. And so there's a lot of different ways in regards to that. I think with the blockchain funding, one of the things that I'm trying to do with the nonprofit is create a safe place for people to come in and create and do that, so that later if they do want to get VC or they do want to get foundational funding from one of these institutions, they've actually gone through and done all the check marks that they need to do. And that's why I do so much work in standardization, is because I think it's really important that we bring up to coin from Gerald, the maturity level of a lot of these different things and figuring out all of those pieces so that way we can go do the things that we need to do.
Maturity level. So I'm the co-founder of the Billionaire Zombies Club, and when I got to the Discord, there's 26,000 unsupervised frat boys, and I'm the only girl. So you can just picture that. So maturity level, yeah, not very. It took me about a month to realize that the vast majority of those people were 13 to 17 years old, and I was like, oh, we got some COPA issues. But speaking of the maturity level, a lot of these projects have anonymous founders, right? Now, probably with the National Science Foundation, you're not going to fund somebody who's, XYZ cat, but you might. And that brings up the question, because you were talking about who do we get to shoot. I'm very much into making sure that you get to own your words and actions, and you don't have to be, doxxed. You can be anonymous, unless you blow it. And then I want you doxxed so we can sue you. That's my standard right there. So how do we kind of incentivize the market to adopt that whole idea of being responsible so that the scammers have no place to go? Like, if we're going to fund them, like in a token generating event, or we're going to do something, and everybody's just a profile picture, how do we know that our funds are going to go where they're going to go? And do you guys have requirements for that when you're giving out these grants, that you can track the spending?
Yeah, we do. We have, I guess, a couple of things. One is that, once you submit your proposal and it's reviewed by the technical and commercial experts that I mentioned, and you are above the bar to be considered for funding, we have a pretty extensive due diligence process that we go through at that point. I have a dozen program directors that work for me that manage that, and they go through a step-by-step process to vet the team, to vet the company, to continue to vet the technology. So there's a pretty significant due diligence process. And then because we are funding true startups, and first of all, we don't, there's no educational level or degree requirement to propose to us. So you don't have to have a PhD.
How about nationality?
Anybody can
Anybody worldwide?
Anybody can submit a proposal. You don't have to have a bachelor's degree or a master's or a PhD. We're open to any innovative person that wants to come in. Now, having said that, once they are vetted technically and otherwise, we have a training program that we put them through. We have an entrepreneurial training program. We have training sessions. We bring in investors. We bring in attorneys. We bring in, business people, large companies and others, or attorneys and others, to help them understand what their life is going to look like over the next few years, because we want them to be prepared to go raise money from angel investors and so forth. And as you know, if you don't even know what a term sheet is, seeing one for the first time can be somewhat challenging. So we want to try
Understanding
to
a discount rate.
I'm sorry?
Understanding a discount rate.
Yeah, we do, and accounting is a big issue, and that because when they first propose, they don't necessarily even have a financial system set up. Or an accounting system set up.
This is one of the things I love about the venture studio model, which is everybody has shared resources. They all use the same things. They have a lawyer, they have an accountant, they have a marketing person who makes sure that they don't say illegal things. That's very important in projects.
That's right, and we actually fund them to do some of these things. So there's some money that they can get in their grant to engage a commercialization expert to help them with their go-to-market plan. There's money that they can use to engage in a CPA or a tax professional to help them set up their financial accounts and even get audited financials, because that, at least in my case, the VCs insisted on that.
Oh, yeah.
We have to have audited financials. And so, there's a lot there, and a lot of first-time startups, haven't experienced that.
Yeah, they don't do meeting minutes either. I'm like the queen of busting the LLCs. I can pierce those veils like there's no tomorrow. I'm like, really? So you made this decision and you spent $100,000. Yeah, when did you have that meeting? They're like, what do you mean I had to have a meeting? It's called makeup minutes before you go to a VC.
There's a lot of embedded questions in what you had. I will say the first round, we were working with Near and Aurora, and we had about a 12% breakage in our grants, meaning that we gave a grant and there's we delivered 46 actually we deployed 51 or 52 grants. And so we did have breakage where people rugged and scammed and they said they were going to do something they didn't going to do. And I would say this is predominantly because of the regulatory environment. That's why it has to work like this, because these foundations that generate these tokens, without clear regulation, we can't go through a similar process in terms of getting equity. So, you know, you can think of it from this cynical route. It's like some dudes got together really smart, they built a blockchain and they made $1 billion blockchain. Now they have $1 billion worth of token, they don't know what to do with it, right? That's kind of like the cynical route. The other route you could say is, hey, they're trying to work their way in a world that doesn't have laws with this stuff, and so they have to go a nonprofit foundation route. And when you go a nonprofit foundation route with all of this $1 billion of token, the way that you have to deploy it, you are granting, and there's no really way to claw back money. I mean, I've heard horror stories of $15 million in a grant and breakage, and nothing got delivered and deployed, and it's like crazy because there's no really recourse to be able to.
You know, we have the ability to actually claw back tokens. There are standards for that. Did you not read Mr. Nobody minted Beeple's 5,000 Days version 2 in Beeple's wallet while he was sleeping by hacking the minting contract to mint it in his, move it into another, and it allowed them to move it. We have those types of abilities. We're just not using them.
Yeah, the future is here. It's just not spread. Right? People don't know, right? Thank you for that. That was cool.
You're welcome. You can
Yeah.
literally, when you issue grants, you can literally have clawback provisions and, you know, KPIs and hitting milestones, and they don't get the rest
Sure.
of it until they hit certain things.
It's not really the problem, though. The problem is like it's super hyper experimental, and that's why you go with small grants at the beginning, and then you hit a milestone, and like the industry is learning. Most of the chains that are quote unquote successful over the last like 3 to 5 years are all investing now. They only invest and do equity investments in their projects. It's all the new chains that need exposure and growth from a very early stage that have not yet made it or like made their impact on the world, that they are the ones that deploying grants, and then they move into investment.
Well, as a startup, I mean, we're taking a risk going with a new chain. I mean, look at Solana. It's really fast, but it's also not available 5 days a year.
Yeah.
Unexpectedly.
He's a cool dude.
Huh? Could be not available on weekends.
I mean, Anatoly is like, he is breaking barriers. Like the mobile phone that they put together is massive innovation, open sourced, like crypto on the phone. It's an amazing concept, and I'm very happy that they're taking that innovation and they're breaking a lot of barriers. Yeah, I think it's you give a small grant at the beginning, and pretty much everybody that we structure grants with now, where we're actually running the program, we structure in a milestone basis. So if a chain is like, hey, we want more users, when you hit different milestone cliffs, we deploy more capital. You get more TVL, get more transactions, we deploy more capital upon that. So we're learning as we go along.
Love it.
Would you really sit there and say that 12% breakage is actually that bad, considering the VC world, or even considering the grant world, or even considering most businesses and how much fraud and detection you have to go through and do at the very
23%
beginning?
on the Swift network. I'd say 12% is great.
Yeah, that's what I would.
Oh, you didn't know that one. Yeah, so this is what I think is funny.
Our breakage is only 12%.
Yeah, it's
So
only 12%.
I think that's pretty
it's only
good.
12%.
To me, I'm like, I want to see your numbers. Because of just thinking about all the losses that you get, just like, you know, how many banks are in the room? How much do you deal with fraud? What are your percentages? You know, that's way more regulated, way more, you know, things of that nature. You know, one of the things that I try and do on all of my stuff is basically prepping people to be ready for some of this. I'm sorry, I'm about to be not quite political, but oh my God, I went through the NSF grant process, not yours, the other one. And I wouldn't wish that on anyone.
Well, that's kind of how I was feeling. I like him. He's nice. I want to play with him.
He's much nicer, but unfortunately, like, so he's the one who like enticed me into thinking about analog computing again. Because like that's the kind of thing that they would go for, not necessarily some of the different things that are already as baked as this. But I was looking at some other NSF grants with in collaborations with universities for example, to do something like citable AI or things of that nature. And the grant making process is really scary and it's really horrendous. And you have to have certain types of accounting and funding and all the accountability and to do that. And so I was like, oh, wouldn't it be cool if we did all pull our resources together where this entity could take all the punches and help with all the gatekeeping, and then all of the other groups could come in and sit there and see how they're going to go about doing that.
Can I get all of your accepted grants, yours too, especially that 2.5 million one? And I will literally make you an AI that will help everybody with their application process and make good suggestions, so you only get good proposals.
We certainly would be interested in anything that will help our process. You can actually, I mean, if you want to take a look at all of the things that we've funded, that's all publicly available online. You can
Including their
take a look at
proposals?
that. Not the proposals.
That's the part
Not
I
the
want.
Proposals. Yeah, there's an abstract. There's an abstract.
That's
but
not the
full
same thing.
proposal.
I've written grant proposals. That's not fun.
The proposals get you in the door with us, right? They'll like, I mean, I would say probably we take a hard look at 10% of them. The rest we kind of throw away really quickly.
So 30 seconds?
A minute to 3.
Okay.
You can see the quality just in like the language, the penmanship, a link to a GitHub, like where they're at, what they've done before. So I used to be in investment banking, and I was a scout for a couple VC. We're scout for crypto VCs now too. It's like 10% of our business. There's a thing we call like founder DNA. And if you want to kind of know what that looks like, it's Brian Armstrong put this post out recently about, hey, if we don't see a job here at Coinbase that you're interested in, if you fit any of these categories, like we want to interview you and we'll try to find you a job. And that's kind of like the exceptionality of individuals where they want, have you launched an open source project before? Have you raised money before? Are you an Olympic athlete? Have you been in part of the special forces? Have you gone to an Ivy League school? It's like, if you've hit some of these thresholds of bars of success in the past, you have the persistence, the know-how, the courage to go through that process again. And so that is looked at when you get to the higher thresholds. Sometimes it's more like an RFP, like, hey, we just need a lending protocol. Please copy pasta on this and run it for 1 year. There's chains that we work with that have, like, there's 30-ish ghost protocols that I know right now that are out there that exist. They're making revenue, but there's nobody running them. Because they're protocols. And they want people to teams and product managers and growth people and marketing people and BD people to come and run them. The code is immutable, it sits there, it works, it runs, it makes revenue. But the team was like, it's not making enough money. Let me go on to do the next thing.
So they're orphaned.
They're ghost ships, they're ghost protocols.
This happens a lot in open source.
Yeah.
It's the reason that some of the security flaws come into being, like
As they upgrade.
DNS.
Right.
Well,
So specifically,
this is what I love, okay? Because I just did this. I literally,
Yeah.
we're taking over a project that the founder's like, I'm done. I came up with this other great idea. I'm going to pivot over here, but this is actually still good and it's going. And we're like, we'll take it.
yeah.
Right? So creating a pool of great founders. That's what a venture studio is. You come up with great ideas, or you adopt great ideas, and you put a team in, and then you run with it.
There's a question I always ask on these interviews and these grant interviews is like, do you make your bed every day? Right?
No.
I don't either. Right? You're a 0 to 1 person. You need a 1 to 100 person, the person that's going to make their bed every day and grow it from 1 to 100.
No, because technically the research says that if you make your bed every day, then you're letting the bacteria grow in the dark, and I let mine air out. It's a health reason, not just because I'm lazy and it's already, I use 11 pillows and my pillow fort is already built and I don't want to rebuild it every night.
So when you're doing hard tech and deep innovation, you need that creative person who is kind of like an outlier, but those generally aren't the individuals that run the company, right? So like, just like you said, like somebody built it, launched it, exited, like you need operational people to come and take over, and they're not always the innovators.
No,
Yeah.
and a lot of times they're Aspies. I think we should be hiring more Aspies in blockchain. We'd get a lot more stuff done. So final thoughts?
Well, I would be, given all the mention of open source, I'd be remiss if I didn't mention another program that's in my divisions, the Pathways to Enable Open Source Ecosystems. We actually fund organizations, for-profit, not-for-profit, universities, whatever, to create an open source ecosystem based on their technology that they've created. So we're not funding the technology development, we're funding the creation of the open source ecosystem.
Nice. Final thoughts?
Yeah, alphagrowth.io. We have a grants onboarding /grants. We also can help with funding in rare cases. Like it's very little part of our business. Love to connect, and if you have a project or you're a chain that needs more deal flow, that's what I do.
Awesome.
If you're doing something and you want to open source it and you want to make sure that you're going to create an actual ecosystem and not just a project, talk to me.
Fabulous. And thank you all. Please make sure if you took pictures, to post them on social, use hashtag GBA events. And feel free to also, what was your aha moment? Put that on social as well and tag it.
Very good. Thank you.
Oh, did you have a question?
I wanted to thank, first of all, Dr. Johnson for raising the possibility of applying to NSF funds by startups, which is what we did a year ago. It took about 4 months for the organization to identify myself. Now NSF knows who I am. And that included multiple mail pieces to be sent to my address in Miami and all that kind of stuff. So I want to thank you for being very thorough for that. Now, we completed successfully that process, the second stage application in April, and we haven't heard from anyone. Is that a concern?
Just jumping straight to the line, bypassing the support channels. There we go.
Well, I wouldn't say it's a concern. If you follow the news, you know that there's a lot of budget discussions going on right now as far as the federal budget is concerned. So this is a pretty, from really the 1st of September through, early October is kind of a tough time from a federal funding perspective. So we've kind of, having to finish up one fiscal year and having to transition to another fiscal year, and in this case, not knowing exactly what budgets are going to be. So no, I wouldn't, if you have a program, reach out to the program director, ask what's going on. If they don't respond, reach out to me. I'm happy. If you take my name, Barry W. Johnson, okay, perfect. Send me an email.
Will do. Thank you.
Fabulous.
Okay, we've actually gone over.
We've gone over time. I'm sorry.
Sorry,